Bonjour, ladies and gentlemen. Good morning. My apologies, I am unable to deliver this in French, and it's never good, I think, to start a presentation with an apology. And actually, it's bringing me back to an occasion when I was invited by the Bank of Angola, the Central Bank of Angola. And in fact, there was the central bank governor was giving some introductions to the panel that we were on, and we were there to talk about capital markets. And I was wearing a set of headphones, as many of you here aren't. And at that point in time, he mentioned that it was very interesting to understand that some people couldn't speak particular languages. So he went around the room and asked, what is the collective term for somebody that can speak two languages? And all the hands went up in the room, and somebody said, yes, it's that you're bilingual. Then he asked for the question of three languages, and said, and the hands went up, and they said, yes, that means someone is trilingual. And this went on until we got to about 6. And then he came back to the fact, he says, so what do you call somebody that can only speak one language? And the entire room went silent, and the central bank governor said, I think you call them British. So my apologies. But we are here for a wonderful day of discussion on this workshop, and I think so far the presentations this morning have been excellent, and I think have really set the scene for some very meaty discussion that we'll have later on. I hope you are able to indulge us to give you a little bit of background and story on our market, our small, medium enterprise growth market in London called AIM, which is celebrating 20 years in existence this year. It hasn't all gone absolutely right, so what I thought we would do is give you a very, very candid overview of where we are today and how we see things tomorrow, and more importantly, how, in partnership with EBRD and with Casablanca Stock Exchange, we can help to grow and develop the market here as well. So, very, very quickly, the London Stock Exchange, just a bit of an overview for those of you that aren't completely familiar with the exchange. We're a global financial services group now, operating in London and in Milan and in several other cities globally. We're a stock exchange listed on our own exchange, now capitalized at about $12 billion US, or just over that. And we have just over 5,000 employees in some major centers geographically. Our business lines are shown here. We have a primary markets business, which operates the listing of bonds, equities, and other asset classes on the markets, traded on secondary markets across all platforms. And we have a burgeoning risk and post-trade business, which is primarily based in Rome, but is actually also based in our other centers, particularly in France, where we run LCH ClearNet, which is a global clearing business. We recently acquired from Russell Investments their asset management benchmarking group, Russell, and have now rebranded as FTSE Russell. That's given the LSE a presence in North America, about 33% of our revenues coming from that part of the world. But the fastest growing part of our business now is our technology and market infrastructures business, which is also a very, very relevant part of our business. So that's LSE. So as I said, AIM is celebrating 20 years this year. Prior to AIM, there was unfortunately a market that some of you probably wouldn't have heard of, which is unfortunately celebrating 20 years of its failure today. A market called the unlisted securities market, which was essentially a quotation market for unlisted stocks. The market grew, it had participants, but it was illiquid. It wasn't a great platform for raising capital. Investors didn't particularly benefit from strong performances. So it was decided that we needed to find a different way of approaching the financing story for small and medium-sized companies. And the idea of AIM was born, but it was born with some challenges. How do you change the perception from a market space that it hasn't performed particularly well? How do you build an ecosystem around SMEs in a place like London, which traditionally supported large equity raisings, had large institutional investors passing their investment flows through that market. But with AIM, we decided that it was important to rip up the books, all the rule books, and start right from scratch. And we came up with a new regulatory framework, which was designed to provide a robust environment and landscape for small companies to come and list. And very simply, we created this concept of having responsibility for regulation devolved away from the stock exchange, and rather with a group of individual corporates who would provide regulation on behalf of that stock exchange. And this is the concept of what we call the nominated advisor, or the nomad. The nomad has absolute responsibility for passing on the LSE's regulation down to the companies that it represents. So this was what happened. And in 1995, 10 companies took the first step. Most of them were in the natural resources industry, drilling holes in the ground, usually coming up with dust or water, never oil, and the things you wanted. And what you needed, therefore, were investors that were able to continue to support those companies moving forward. And in that regard, it needed a special type of investor, one investor that would not look to run off to another type of stock just because the performance wasn't good at that particular time. And that's what happened with AIM and how it was born out of the first 10 companies. Now, that regulatory framework has grown to be something that is being used globally and in a global environment, and has helped to support this story of AIM that you can see here. The other areas where we then needed to look at how we would address some challenges were in the challenges of developing the market. So SMEs are notoriously illiquid. They are notoriously singular in terms of the sectors that they represent. And I'm alluding to examples such as Nouveau Marché in France and the Newer Market in Germany, which were all focused on singularly on certain sectors. But on AIM, we said, well, listen, let's not constrain ourselves at all. We'll make sure that we have a multi-sector approach. And today, over 40 sectors are represented on the market, making it one of the most diverse international capital markets globally. The other area where it was important to have, well, there was a challenge, was really working very, very closely with government. Government, particularly the UK government, is not interested in handing out subsidies. They want all market dynamics to be moved along with usual market forces. So, for example, we used to have for capital gains tax, which is a tax that is, corporate tax rather, which is a tax paid by individual corporates. We used to have two different bands, one for SME companies and one for larger companies. But after a while, the government took that away. So what incentives, how do you get government engaged in the importance of having these markets, which we know are the lifeblood of funding for innovation, enterprise, and ultimately bringing on jobs? So we at the exchange, and we're going right to the end of this particular graphic here, which you may be able to see, we worked tirelessly on lobbying the UK government to change the incentives away from companies, but giving the incentives rather to investors. And today we have an environment now where AIM companies aren't subject to certain taxes in the UK, financial transactions tax called stamp duty. And also AIM companies are now eligible for being included in individual savings plans, so access to retail investors, as well as the established institutional market that London has. Ensuring the market continues to remain relevant is also extremely important, and that's our challenge moving forward. We realize the importance to internationalize AIM, and I'm not talking about internationalizing by having international companies on our markets, but having the franchise of AIM internationalized. And in 2008, we were fortunate enough to launch AIM Italia, which is our Italian version of the market. The LSE also is the operator of Bourse de Casablanca, the Italian stock exchange. And that market has grown from strength to strength. There's also been other examples of London working closely with other international venues. In Tokyo, for example, there was, again, a franchise to bring the small cap environment to greater visibility in Tokyo as well. So that is an important challenge moving forward, the internationalization of that brand. Dovetailing with that, securing future pipelines and increasing the exit opportunities. And very briefly, I'm just going to go back to this particular slide here. You can see the aim in this grand scheme here is actually the second market that we have, and feeds into more than just one market. So what are the important things to provide a platform for AIM? And I'll talk a little bit more about Elite, which you can see there at the bottom slightly later on. What are the important exit opportunities? Do companies want to be small cap markets in perpetuity? No. They actually want to have an opportunity to grow and to become accessible by a range of different investors and a range of different stakeholders. So we have the high growth segment, which is a market pre the main market in London, which provides, again, an alternative step-up opportunity for quoted companies on AIM. And I think the third area with regards to our success recently and the challenges that we've had equally, I talk about them at the same time, is really about how you survive the shocks. I don't think any of us here could have predicted what happened in 2008. But the reality is that the AIM market, although it took a very, very substantial hit, still remained robust because of this ability to be diverse enough and having an ecosystem of investors and advisors that actually all they do is live, eat and breathe growth company stocks. And in that regard, we've also really removed that terminology SMEs from AIM. We have companies on AIM that are worth $5 to $6 billion. We have companies that are considerably smaller than that. But the important consistency in all of those companies is that they are all in a very, very similar trajectory of turbocharged growth, where investors can, from an early stage, get access to those companies and enjoy that equity growth in partnership. So what does the market actually look like now? After 20 years of admissions, it's actually looking in pretty good shape. A lot of those challenges we talked about have been addressed, and to a larger extent, we've seen AIM grow significantly. There are about 1,100 companies now quoted on AIM. I'm going to use sterling. I hope everyone's comfortable with that. $72 billion market cap of those companies. And of those 1,100 odd companies, about 200 companies are from international jurisdictions. But you can see there with the very first graphic in the top left that actually the sweet spot for AIM companies is for companies with a market cap between 10 and 25 million pounds, which is quite extraordinary for a growth company's market. In other markets, that number is slightly higher. In other markets, it's slightly smaller. But in AIM, it seems to create the right level of traction within that particular market cap band. Fundraisings over the last 20 years have been exceptional. Over $91 billion has been raised on AIM. And then within that, about $50 billion of that has been raised through further capital raising. So once the company's listed, it's further capital raising, which on AIM, under the regime that we have in the regulatory environment, is much, much simpler to do than if you were looking to raise additional capital on the main market. I'm going to ask you to have a look at the pie chart that's there on the bottom right-hand corner, and you can really see, although we have the main sectors here, I mentioned there are about 40 different subsectors on AIM, but you can see no one particular sector really dominates any other. London, I think, has always had a strong tradition in financing natural resource stories. It's always had a strong tradition in attracting companies with financials backgrounds, insurance companies, banks, and other similar financial institutions. But you can see, apart from where you would expect there to be scale and scope, for example, national telecom carriers or utilities companies, there's a very, very equitable spread of corporates across the AIM market. It's impossible to talk about small cap markets without touching on liquidity. And we really believe strongly in one thing, which is that exchanges are facilitators of liquidity. They can't create liquidity. Liquidity, generally speaking, is a function of a number of different factors, including free float and the diversity of the investor plans, the investor base rather, exceptional performance, and a whole range of things. But what London can do is bring over 200 years worth of market-making experience. It can bring a very wide and very diverse pool of investors that currently invest in larger cap corporates, all to the same venue where small cap markets are trading. And in that respect, AIM has done fairly well. Having a look at the very top graphic, that simply shows there the dark blue is the collection of companies in the FTSE AIM All-Share Index. So it's the AIM index of all companies. The light blue is for companies on the main market. So these are companies that aren't currently in the FTSE 350, 250, or 100. And you can see that through all of those market cap bands, from 0 to 25 million, and all the way up to the top bands, they have 500 million plus. Actually, AIM stocks are more liquid than main market stocks. Now, it's not possibly the most convincing of benchmarks, but when you look at that turnover velocity and you measure that across other growth companies' markets, and we really only consider 2 growth companies' markets to be anywhere near AIM, so that in the one in South Korea and the one in Toronto, AIM stacks up very well. So I think that's a very important message about liquidity. Now, London's very fortunate to have, for example, indices and a whole range of other tools that are used to support that liquidity. But I think it's a lot of this expertise that we have that we're very keen and excited to want to share here in Morocco. Importantly, you can see on the right-hand side, the investors that are in AIM, the top institutional shareholders, are pretty much like the regular institutional shareholders you would see in any other market. So Invesco, BlackRock are there, Barcap, M&G Investment, and other names very similar. And if you went down that list, you'd also see the JP Morgan Asset Managements, the Fidelities, and other companies of a similar nature. So liquidity is key, but it's essential to have the right platform in order to grow and develop that. So as a result of all of this, we've been rather fortunate. AIM's actually become quite international. And the areas of note there are 70 companies from North America quoted on our market, 56 from Europe, 77 from Africa, 112 from Asia, all raising substantial amounts of money. Now, this internationalization didn't really come until the mid-2000s, when there was a bit of a growth spurt for companies using overseas markets, but it's something that obviously we're very happy to have. So AIM as a market, I think it's done well. It's done well in the UK. It's provided that link in the financing chain for companies. It's an essential point of view that, particularly for SMEs, that innovation really comes out of partnership, and partnership with equity investors. So my apologies to all the bankers in the room. And I know there are a lot of Moroccan bankers here. And by the way, I've heard that Moroccan bankers are particularly profitable, and they do very well, to the point that if you ever see a Moroccan banker looking down off the top of a skyscraper wanting to jump off, you should probably follow him, because there's probably money to be made. But let's have a quick look at the impact of AIM on the UK economy. Now, we commissioned a report through Grant Thornton, the advisory company, to have a look at what AIM has done over the last 20 years. Now, the first graphic on the left-hand side shows the geographic spread. It's a heat map of where the most patents have been granted, so patents and trademarks across the UK. And you can see that they correlate pretty strongly with the orange dots, which are where UK AIM companies are located. So there's a definite push in terms, particularly outside of the traditional regional areas like London and the home counties. We're seeing a part of Scotland becoming more and more important for growth in the economy. And all of these companies have raised their capital on AIM. Now, let's have a quick look at these numbers. $14.7 billion is the contribution of AIM companies to the UK economy. Let me put that in context. The government a few years ago launched some key industries in the UK. Aerospace, its contribution was $9.4 billion to the UK economy last year. Pharmaceuticals, its contribution was $11.9 billion. And as well in the area of automotive, just $12 billion. So it's really showing that AIM has done extraordinarily well. Now, that $14 billion generates about 430,000 jobs in the UK. That's directly. Now, indirectly, when we talk about the advisor firms that advise these companies, the lawyers, the accountants, the bankers, public relation firms, the registrars, the additional GDP revenue generated from them is another $5.3 billion pounds rather, and again 155,000 jobs, and then the induced impact, which is really what the employees of the AIM companies, when they go and buy and spend money after a day's work, they generate another $5 billion worth of GDP in the UK economy. So all in all, the total effect is about $25 billion from a group of SME companies in the UK, nearly 250,000 jobs. It's quite extraordinary. Now, of those AIM companies now, we've talked about the GDP contribution, but also importantly is the tax contribution as well. AIM companies now are responsible for generating about $2.3 billion worth of taxes in the UK. So the Chancellor definitely has a big smile on his face. So we talked very briefly at the beginning about what happens prior to AIM, and one of the things that we have been very, very determined to do is to develop a pipeline for AIM. We believe that it's important that companies start to adopt the practices of being listed companies at a very, very early stage. And for that reason, in Italy a few years back, based on a number of factors, a program called Elite was launched. And the Elite program has been very important for a number of reasons. Number one, it's been an excellent way of getting close to companies at an early stage, not just companies, but also a chance for corporates to get close to an ecosystem of advisors, private equity and venture capital firms, intellectual and academic contributions from a number of different providers, from business schools, and all with a singular objective of getting companies ready, getting companies fit, and getting companies to have value later on. Now, Elite essentially is a comprehensive training program for managers and founders within the company, and really helps them to start to inculcate those behaviors from a very early phase. How's Elite done, or how's it performed? So over the years, 30 companies within the first, launched in April 2012, 30 companies within the first 6 months, all the way up to now, when Elite UK was launched and Elite Europe was launched, we have, as you can see, over 270 companies, all currently on this Elite program. There are some results. 15 companies out of those companies have completed a private equity deal, had capital infused as a result of being part of the Elite program. 15 companies have announced an IPO. One is actually listed on a public market in Italy, on AIM Italia, I believe. 10 companies have raised 300 million euros through a bond program. There have been 50 M&As and JV deals completed, and 250 million euros raised by state-owned institutions that are also on that program. So it's a very, very important initial juncture that we feel is essential when you're looking to grow all elements of a growth company's environment. And I just really want to conclude, and it's quite poetic actually. There's a gentleman here who I won't embarrass, but his name is Mr. Simon Brickell. Some of you may be familiar with him, but he was one of the founders of AIM. And these are some of the these are the four principles that essentially AIM was founded on. And I just want to take you through them because I think they're quite important. The market should be open to small and younger companies from all sectors. As I mentioned, it's not just about small companies, it's about growth companies. The growth trajectory is the most important thing. It's about having diversity, 40 different sectors represented on that market. Point number 2, a market built on rich tradition of market making and open to investors of every kind. London has nearly 200 years of market making, but it's also brought in its new technology to provide hybrid trading platforms, so order book and quotation-driven systems to enrich the liquidity of companies and to open up the market to all investors. We have our regulatory approach, which essentially looks at the needs of companies. So we feel if you're a small company, you're going to be spending a lot of time running your business. You need an advisor that's going to tell you and help you in terms of your regulatory obligations and requirements on an ongoing basis. And that's essentially the nomad model. And then fourth and finally, a market that's open to learning and evolution. And we're doing that all the time. And I think an important statistic, maybe just to end on, ladies and gentlemen, is that in Europe, we've always complained about our issues, whether it's the fact that we have migrants coming in, or whether we have not enough sun in London and too much rain in Manchester. But essentially, we have a problem, which is unemployment. And there are 23 million unemployed people in the European Union today. But rather interestingly, there are 24.6 SME businesses in Europe. Now, if we were able to fund those businesses so that each one of those could take on one person, it's very simplistic, but maybe we would have a solution to that problem. Ladies and gentlemen, thank you very much.